He fed it into the shredder himself. He didn't hesitate. He didn't ask a question. He picked up the wire transfer authorization form, the one she had placed carefully on the counter in a clear protective sleeve. He slid it out of the sleeve, he looked at the number printed at the top of the form, and he fed it into the shredder that sat beside his station like it was junk mail. The machine took exactly 4 seconds. The paper came out the bottom in thin strips. $15 million, he said. Ma'am, I don't know what kind of game this is, but this is a bank. He said it loudly, not shouting, the particular loudness of a person performing confidence for an audience. 3 other tellers had gone still at their stations. 2 customers at the rope line had turned around. A security guard near the door had looked up from his phone. The woman on the other side of the counter had not moved. She had watched him put the form in the shredder. She had watched it come out in strips. She was holding a clear protective sleeve that was now empty, and she set it on the counter very carefully, the way a person sets something down when they are deciding what to do next. She was wearing a blue raincoat. She had a canvas bag on her shoulder. She had arrived at the branch at 9:14 on a Thursday morning when the line was short and the day felt ordinary. Her name was Constance Addo. She was 53 years old, and Bradley Marsh, teller at the Westbrook branch of First Continental Bank, had no idea who she was. He was about to find out. So was everyone in that building. Have you ever had something that was completely, documentably, provably, real treated like it couldn't possibly be? Let me take you back. 14 years. To the morning Constance Addo opened a business with $140 and a borrowed folding table. Constance had grown up in a house in southwest Philadelphia where the philosophy was practical and direct. What you build with your hands, nobody can take from your hands. Her father, Emmanuel, had said this regularly around the dinner table and in the car, and once, memorably at a school meeting where a teacher had implied that Constance's grades were as high as they were likely to go. Emmanuel had listened to the teacher finish her sentence and then said quietly, "What you build with your hands, nobody can take from your hands." The teacher had not known what to do with this. Constance had understood exactly what it meant. Her father said things not as poetry, but as instruction. He was a carpenter who had come to this country with $17 and a set of woodworking tools wrapped in a cloth, and had built over 40 years a small but respected custom furniture business that employed at its height 7 people and had a 4-month waiting list. He had hands that looked like they had been carved from the same wood he worked with. He had hands that looked like they had been carved from the same wood he worked with. He died when Constance was 31, and he left her 2 things: the set of woodworking tools wrapped in a cloth and the 4-month waiting list. She didn't become a carpenter, but she understood the tools. She understood the waiting list. She understood that what he had really left her was a principle, patience, quality, and a reputation that travels before you enter the room. The business she opened at 39 with $140 and a borrowed folding table was a procurement and logistics consulting firm. She called it Addo and Associates, which was a generous name for one woman and a folding table, but she had always believed in naming things accurately for what they were going to become rather than what they currently were. She had a background in supply chain management that she had built the way her father built furniture, not quickly and not wastefully, with full attention given to every joint. 12 years working for a mid-size regional retailer, the last 4 as the head of their vendor procurement division. She had spent those 12 years learning the architecture of how products moved through systems, where the inefficiencies lived, how contracts could be structured to protect both sides of the relationship without anyone having to be adversarial about it. She had become very good at this. She had also become very clear about who she was doing it for. Eventually, herself. She knew how to move product, how to evaluate suppliers, how to structure contracts that protected the buyer and kept the supplier honest. She knew it at a level that most people with her years of experience knew it, and she knew one thing more. She knew that the mid-size clients, the companies too large for a handshake deal but too small for a big consulting firm's minimum engagement, were underserved and willing to pay for expertise that actually called them back. She worked from her kitchen table for the first year. She had 3 clients. She invoiced them herself. She answered her own phone. She drove to site visits in a car with a heat issue on the driver's side that she fixed once and had to fix again 6 months later. She kept her books in a green spiral notebook that her father would have recognized. The same kind he had used for the furniture business, the same kind he had filled with dates and amounts in his particular handwriting that slanted slightly to the right. By year 3, she had 11 clients and had hired her first employee, a recent graduate named Yolanda, who had applied for the position with a cover letter that was precise and direct and had a single typo in the 3rd paragraph that she had noted in parentheses at the bottom of the page, followed by the word "caught." Constance had hired her within the week. Yolanda turned out to be exceptional in every regard and is now, 14 years later, the firm's chief operating officer. She still catches typos before anyone else does. By year 6, she had outgrown the kitchen table and taken a small office in a building in Center City. The office had 2 rooms and a reception area that was optimistic in its dimensions. She put her father's set of woodworking tools, still wrapped in the same cloth, on a shelf behind her desk. Not on display exactly, just present. The way important things should be. By year 9, she had 41 clients across 4 states and had won a regional Small Business Excellence Award that she accepted in a room with 200 people and a podium and said simply, "Thank you, and my father was a carpenter," and then sat back down because she had never been interested in the podium, only in the work. By year 14, Addo and Associates had annual revenues of $38 million, a staff of 23, and a client roster that included one of the largest hospital networks in Pennsylvania and 2 state agencies. They had a new office. The green spiral notebook, the same kind her father had used, bought at the same drugstore chain, filled with dates and amounts in her particular handwriting that she had not noticed until years later slanted in the same direction as his, was in a glass display case in the small conference room. Not out of sentimentality. Constance was not a sentimental person, exactly. She was a person who understood the use of the past. The notebook was there because she believed that knowing where you started made you better at knowing where you were going, and because every new person who joined the firm saw it in that case and understood immediately what kind of company they had joined. The $15 million wire transfer on the Thursday morning was a contract advance payment from a new client, a manufacturing consortium that had engaged Addo and Associates for a 3-year procurement restructuring project. The contract was among the largest in the firm's history. The wire had been initiated by the consortium's finance team. The authorization form was standard, generated by their banking system, and had been delivered to Constance as a hard copy with a digital verification code on the header. The form was entirely legitimate. The number at the top was $15,240,000. She had placed it in a clear protective sleeve because it was an important document and she was careful with important documents. She had come to the Westbrook branch specifically because she had been a customer at that branch for 11 years. Not a small customer. Her business account, her personal account, and the firm's payroll account were all held there. The branch had processed wire transfers for her before. Nothing in the range of $15 million, but transfers in the high 6 and low 7 figures over the years without incident. She had not expected an incident. Bradley Marsh had been a teller at the Westbrook branch for 22 months. He had a neat part in his hair and a performance rating of meets expectations on his most recent review. He had never processed a wire transfer above $200,000. He had never personally encountered a customer whose account had a 7-figure balance. He had also, in 22 months, developed the particular confidence of someone who has learned enough to be certain they know things that, in fact, they do not know. When Constance had slid the authorization form across the counter, he had looked at the number and something in his expression had gone off script. He said, "I'm sorry, what is this for?" She had explained, concisely, clearly, the way she explained things to new people in any context. He had looked at the form again. He had looked at her. He had looked at the blue raincoat, the canvas bag, the practical shoes. He had made a calculation that had nothing to do with the numbers on the form and everything to do with what his experience, limited and unexamined, told him about who stood in front of him at a bank counter on a Thursday morning holding a piece of paper with $15 million on it. He fed it into the shredder, and he said what he said. Constance set the empty sleeve on the counter. She looked at it for a moment. She thought about the green spiral notebook in the glass case. She thought about the borrowed folding table. She thought about her father's woodworking tools wrapped in cloth. She thought about 14 years. She thought about 23 employees whose payroll came out of her accounts at this branch. She said, "I'd like to speak with your branch director." He said, "Mrs." She said, "Ms." He said, "Ms., I understand you're upset, but..." She said, "I'm not upset. I'd like to speak with your branch director." He said, "She's in a meeting." Constance said, "Tell her it's Constance Addo." She said it the way you say something that will be understood by anyone who knows what it means, and the clear implication was that the branch director would know what it meant. He made a call. He was on the phone for 45 seconds. Something happened during those 45 seconds that changed the quality of the air at his station. He hung up. He looked at the counter. He looked at the shredder. He looked at Constance. "She's on her way out," he said. Sandra Reyes, branch director of the Westbrook location, had been in her role for 6 years. She had been the one who onboarded Constance's business account in year 1, when the firm was 3 years old and the balance was modest and the potential was visible only to people with good judgment. Reyes had good judgment. She had spent 6 years watching the balance grow, not with the proprietary pride of someone claiming credit, but with the quiet satisfaction of someone who had made a correct assessment early and had been proven right over time. In those 6 years, Constance Addo had been among the branch's 5 largest commercial clients by average monthly balance. That was not a small distinction. The Westbrook branch served 431 commercial accounts. Reyes knew Constance's name. She knew the firm's name. She knew the account numbers by heart the way you know the accounts that matter. She had been in a staffing review meeting when the call came. She had ended the meeting in 45 seconds. She came through the door from the back offices at a pace that was not quite running but communicated the same urgency. She looked at Constance. She looked at Bradley Marsh. She looked at the shredder. Her face went through 3 expressions in rapid sequence: recognition, comprehension, and something closer to controlled horror. She said, "Constance, I'm so sorry. Come to my office." What happened in that office over the next 40 minutes was, on one level, the immediate practical resolution of the situation. Reyes called the consortium's finance team directly, obtained a new digital authorization on the spot, initiated the wire transfer through the branch's senior processing system, and confirmed receipt with Constance before she stood up from her chair. The transfer cleared by 11:30. The $15,240,000 moved exactly where it was supposed to move to the penny, and the project that it funded began on schedule. On another level, something else had already begun. The customer complaint that Constance filed that afternoon was 2 pages, typed and printed, formatted with the care she applied to client deliverables. She was precise. She named the date, the time, the teller, the form, the shredder, the strip width of the output, and the names of the 3 witnesses who had been present at the adjacent teller stations. She had asked for their names before she left the branch, politely and directly, and they had given them. She cited the dollar amount of her current commercial deposit relationship with the branch and the number of years she had been a customer. She included the digital verification code from the consortium's original authorization form, the code she still had, from the digital record even though the paper had been destroyed. The form could be reprinted. She had known this when she watched him feed it into the machine. She had let him believe otherwise. She did not think of this as a strategy exactly. She thought of it as patience, the willingness to let a situation complete itself before you responded to it. Her father had taught her this too. He said, "Let the wood settle before you join it. The joint is stronger for the waiting." She cited the dollar amount of her current commercial deposit relationship with the branch. She did not use the word humiliation. She used the word conduct and the word professional and the word documented, and she wrote those words in the way that people write things they intend to be read carefully by people in positions to act on them. The complaint went to the branch's regional compliance director. The regional compliance director read it in full and forwarded it to the head of consumer and commercial banking relations at First Continental's national office within 24 hours. It landed there on a Friday afternoon. By Monday morning it had been reviewed by legal and escalated to the chief executive's office. Not because $15 million wire transfers are rare at large banks, they are not. Because the documented destruction of a valid authorization document, combined with the circumstances of the interaction and the standing of the customer, was exactly the kind of situation that a large bank understands immediately, in terms of both its moral weight and its potential trajectory. The internal investigation was brisk and thorough, driven by the specific urgency of institutions that recognize liability in motion. It concluded within 12 business days, which for a bank the size of First Continental was unusually fast. Speed, in this context, was not a sign of carelessness. It was a sign that the findings were not complicated. What had happened was documented. The witnesses were on record. The shredded document had a digital twin. There was very little to investigate and a great deal to act on. It found that Bradley Marsh had acted outside protocol in 3 specific ways. He had handled a document belonging to a customer without authorization, he had destroyed that document without basis, and he had made a determination about the validity of the document based on factors that the investigation's report described in careful but unambiguous language as unrelated to the document's content. The report also found that 2 witnesses at adjacent teller stations had observed the interaction and had not intervened or alerted a supervisor. Bradley Marsh was terminated. His termination letter cited 2 of the 3 protocol violations and the investigation findings. He was 28 years old and had 22 months of experience and had made a decision in 4 seconds that ended his employment at the bank. The regional compliance process that followed was broader. It examined complaint and escalation records across 12 branches in the region over a 36-month period. It found a pattern, not universal, not everywhere, but persistent in certain branches, of differential treatment in the handling of high-value transactions based on customer demographics rather than account standing or documentation validity. The pattern was documented. It was given to the Regulatory Affairs team. The Regulatory Affairs team brought it to the Office of the Comptroller of the Currency in a voluntary disclosure. Voluntary disclosures in banking regulation are rare. When they occur, they are noted. This one resulted in a supervisory agreement that required First Continental to implement mandatory implicit bias training across all retail banking staff to establish a documented escalation protocol for any wire transfer above $1 million that included customer account verification before any action was taken on the form, and to submit quarterly compliance reports to the OCC for the next 3 years. The agreement was published in the OCC's public bulletin. It named the bank. It cited the event. Constance did not seek litigation. Her attorney had prepared a case. It was a good case. She read it, thanked her attorney, and asked what outcome the case could produce that the regulatory process could not. Her attorney said, "A settlement payment." She said, "I don't need their money. I need the process to change." Her attorney said, "The complaint you filed already did most of that." She said she knew. She had written it for exactly that reason. She did, however, make one additional request directly to First Continental's CEO in a letter that was 2 paragraphs long. She asked that the branch's new escalation protocol, the one requiring account verification before any action on high-value transfer forms, be named internally as a standing procedure, not as a policy update. She said the difference mattered. Policies get updated. Procedures become culture. The CEO agreed in writing. The procedure was named the Account Standing Verification Protocol and is currently in use in 214 First Continental branches across 8 states. 2 years after the Thursday morning at the Westbrook branch, Constance Addo spoke at a business leadership conference in Philadelphia. She was on a panel about commercial banking access for minority-owned businesses. She told the story of the shredder exactly once, briefly, plainly, without theater. She did not make it the centerpiece of the talk. The centerpiece was a slide with a graph showing the growth of Addo and Associates from year 1 to year 14, revenue numbers on one axis, employee count on the other, a line that rose steadily and did not stop. At the end of the panel, a woman approached. She couldn't have been older than 26, carrying the specific combination of ambition and anxiety that belongs to people who are trying to become something and are not sure yet whether they are allowed to. She came up to Constance and said she had just started a small consulting business and was terrified that nobody would take it seriously. She said this with the kind of directness that people use when they have decided to be honest because being careful hasn't been working. Constance recognized that quality. She had had it herself. She still had it. Constance asked how long she had been at it. The woman said 5 months. Constance said, "Show me what you're working on." The woman pulled out her phone. Constance looked at it for 2 minutes. She said 3 specific things: concrete, actionable, addressed to the exact problem the woman had described. The woman wrote them down on the back of the conference program because she did not have anything else to write on, and Constance saw this and reached into her bag and gave her a pen that wrote properly. Small things, the right things. Constance gave her a business card and said, "Call me in 6 months, and I mean call, don't email." The woman called. 6 months later, almost exactly. Constance took the call between 2 client meetings, sitting at her desk in the Center City office, next to the small conference room where the green spiral notebook sat in its glass case. She had 12 minutes before her next meeting. She used every one of them. This is what the folding table produces. If you are patient enough and stubborn enough and clear enough about what you are building, and if you are willing to file the 2-page complaint and mean every word of it, a line on a graph that doesn't stop, and the capacity to give someone else 12 minutes that are worth more than they know. And one more thing, a protocol in 214 branches. Not because you wanted the protocol. You wanted your money to go where you sent it, and you wanted to be treated like a person who had earned the right to send it. You got that. The protocol was extra. It was the institution being forced one more time to be better than it had been the morning before. If this story moved you, if you have ever been treated as though what you had couldn't possibly be real, share it. Like, subscribe, hit the bell, and tell me, have you ever walked into a room prepared, documented, and completely dismissed anyway? What did you do? What do you wish you'd said? Here's what really gets me about Constance Addo. She watched a man feed $15 million into a shredder and she said quietly, without raising her voice, "I'd like to speak with your branch director." That is it. That is the whole response. No scene, no escalation, no anger performed for the benefit of the people watching. Just the measured, patient certainty of a woman who had been building something for 14 years and knew that the document could be reprinted, but the conduct needed to be on record. She filed 2 pages. She named 3 specific things. She said, "I don't need their money, I need the process to change." She got the process changed. 214 branches. That is what 2 pages and a patient disposition produces. What is the thing you didn't react to when every part of you wanted to react? What did you do with that energy instead? Tell me in the comments.